Hey, everybody, happy Monday. This is an interesting story. Inspired yesterday, and I think it is very important for us always all to question our theses. So the story today it's a Bitcoin story, trust me, but it's also heavily about what it is, how it compares to gold bugs, how it compares to performance. So let's not waste any more time and jump right in. Thank you all for the likes in advance. This is a fun one. So first of all, making sure the audio works. I think it does. Otherwise, I'll hear complaints. And of course, this is not investment advice, it's edutainment. So I always say ABQ. Always be questioning. Always question yourself. Question your investment thesis, etc. We pop this slide up so you guys can see. And this quiet bear market gives us time to reflect, analyze our investment theses, challenge ourselves. And this is what the story is all about. But it's also about high conviction in a few names. And it's inspired by a comment from a gold bug. With their high conviction, it made me think about many other parallels between me, what I do, parallels between gold and Bitcoin. And we're going to look at Bitcoin price predictions, key risks, key success factors, and a few other interesting parallels as we go forward. But let's just jump in. First of all, big thank you to Stephanie Pomboy and the team at Wealthion, Adam Taggart. There was a great interview I heard yesterday. And what got me, I was just listening to my headphones. I wasn't looking at the video. But I heard Stephanie, who is very, very, very versed in all things macro, the Fed and markets and everything else. Truly impressive. Great interview. But she said she was 90% gold, 60% physical bullion, and 30% in gold miners. And I thought, wow, that's hardcore conviction. And also, she said a couple of other interesting things. She only looks at the screens when the screens are green, which I thought was funny. And she said she puts her money where her mouth is, which again, high conviction. And I respect that. So let's talk about what is the definition of a gold bug? And is there a definition? Well, there is, and I popped it up here. So it said a gold bug is someone who expounds the virtues of gold as an investment and who thinks its price will perpetually increase, just like Bitcoin. Second, they often center on a perceived threats posed to fiat currencies that makes gold attractive, just like Bitcoin. Third, gold bugs argue that because gold is priced in relation to fiat currencies, gold would therefore appreciate in value because fiat currencies lose their value, just like Bitcoin. See any parallels here? Gold bugs are Bitcoin bugs. The same thing. Absolutely the same thing. Different asset, but pretty much the exact same reason for investing. So basically, gold bugs and Bitcoin bugs are one and the same as we go forward. Now, what is the difference? There are some subtle little differences. First of all, this is per Dan Held. He said, gold bugs become Bitcoiners, but he's never seen it go the other way around. True. I can't actually find any that I know that actually converted back the other way. Second of all, it's like we're all looking for the same thing. Thank you, MT. It is a battle for monetary system is Darwinian. And obviously, especially in today's world, people have increasing rents, lower wages, loss of purchasing power, and the top 1%, the top 0.1% are squeezing the middle person. I talked about that in yesterday's video, and I think the day before too, over the last it was Saturday's video, about the last 50 years and how certain things have gotten very expensive versus actual average salaries. So let's talk about another parallel. First of all, Bitcoin hodlers, just like gold bugs, they don't sell. This was an interesting chart sent to me before I did this from Sanjay. I thought it was very appropriate. And that is the 2017 Bitcoin buyers are not selling this year. And Bitcoin has recovered a little bit from its macro lows of 17,600 a few months ago. But nobody that bought in 2017 has sold. In fact, the hodl ratio for this cohort is at an all-time high of about 24.5%. And they own a quarter of the 19.12 million Bitcoins. One quarter is in this group that hodl. And some people think, well, that's a risk. How can Bitcoin be successful if people just hold on to it? Well, it's number go up technology. The least supply, the more demand, the more the price will go up. So that is also related to the theory of gold as well. It's supposed to be fixed in supply, but really it's not. It's plentiful in the earth. Let's do a little example, because it wouldn't be one of my videos if it wasn't for a lot of numbers. So I put together a very simple illustration, kind of a gold bug Bitcoin flip illustration. What would happen if you're investing for long-time wealth? And just to put things out, because I'm talking a lot about the last 50 years for quite some time, and I thought this would be a cool little example of how well gold has done up to a certain point. So if you imagine in 1970, 1971, gold was about $20 an ounce. You could have bought 100 ounces for $2,000. Okay, so that's what we did. Imagine 1970, 52 years ago. In 2013, we decided, you know what? I want to diversify my bag. And by the way, it may sound like a history lesson, but there's lots of lessons here about kind of moving to faster horses and optimal portfolio allocation. Super simplistic example, but a lot of learnings from it. So bear with me. So in 2013, gold is now $1,300 an ounce. Thank you, Java, sir. $1,300 an ounce. The value, because we have 100 of them, is $130,000. But we decided to do something different. We sell half. It's for $65,000 in 2013. And we take that half and we buy Bitcoin with it. So Bitcoin at the time was trading at about $70. And we buy 930 Bitcoin. Okay, so first of all, we held for 40 years. And then we're going to look forward another 10 years. So 10 years later, which is pretty much now, gold is $1,620 an ounce, the price today. And the value of those 50 ounces, because we sold 50, is now $81,000, which is still a lot more than the $2,000 we invested 40 years ago. But the 930 Bitcoin, valued at $19,200, it's actually fallen $80, but forget that, it's just illustration purpose, is $17.856 million. So let's fast forward again to 2032. My price target for gold in the year 2032 is about $3,000 an ounce. The value will be $150,000 for those 50 ounces. And your 930 Bitcoin, assuming you hodl it all, will be worth $802 million, because the price will go to $863,000. Again, 2032. That's through multiple halvings from where we are now. So that's, again, conservative price target, heavily sandbagged if adoption continues at the rate that it's continuing. So that is just something to think about, how people need to change now. Bitcoin versus gold. As Michael Saylor says, he says, Bitcoin is 1,000,000 times better than gold. And he said, Bitcoin was designed to be perfect pharmaceutical grade gold in a tweet once as well. And of course, Michael Saylor is pumping a lot of money, owns over 130,000 plus his own personal stash, probably way north of 160,000 Bitcoin right now. And he also owns a lot of stock in his company. So let's talk about gold and what's happened to gold over the last 10 years, because we're talking about decade cycles, 10 years into the future, 10 years into the past, etc. But gold is down 9% over the last 10 years. And if you take out purchasing power debasement, it's down 48%. So it hasn't done very well. September 27, 2012, gold was trading at $1,763. Now it's $1,620, exactly 10 years later. So again, not perfect, but again, also reflects how certain assets can be very volatile. They move up and down, but the overall trend is up, especially for Bitcoin, many believe. So a quick refresher from yesterday's slide in case you missed the video. I talked about the Bitcoin halvings and diminishing returns. Yes, the 2032 price of 863 is what I used before. But you can see, just like gold hasn't performed very well over the last 10 years, in fact, it's gone down a lot, Bitcoin is expected to go up, but not as fast as it used to. So don't expect to get the same 60,000% returns or 300,000% returns as you did in the early days. But still, many people say we're still very early. And if adoption continues at this rate, and the people continue to hodl like the people that bought in 2017 and not letting go, then you can expect great things from this asset. So now we're going to switch gears for a second. We're going to talk about some of the risk factors involved. What could derail Bitcoin? So first of all, the big question, you hear Jamie Dimon say it last week, Bitcoin is a Ponzi. So is it a Ponzi? Well, nobody ever asked anybody to put money in it. The founder never ran away with a big chunk of money. In fact, he left it in the network, and that is Mr. Satoshi. And Bitcoin never asked you to recruit new investors. And Bitcoin doesn't promise or give monthly returns. And Bitcoin has no head. There's no call center. There's no CEO. Nobody controlling it. So therefore, it does not qualify as a Ponzi. So it killed that piece of FUD out of the gate. But there are more inherent risks. This one is what many people are concerned about. And the more we go forward, the more we see, again, as I talk about 2019, I thought, great reset, no, never going to happen. But the type of crazy stuff going on in the world today, yes, there's some really, really, really stuff shaping up. So this is from Klaus Schwab. He said, for those who haven't heard it already, a new world could emerge, and the contours of which is incumbent on us to reimagine and to redraw. That's code for the Great Reset, and the Libertarians and the Doomsday preppers are looking for a coin or an asset, or they're hoarding silver or gold. They say silver is easier to spend in the event of dark days. Gold is there, but also Bitcoin could be an option too. The other risk that people talk about is the ban, a global ban during a Great Reset. Well, telephone companies tried to ban the internet and internet phoning software. It's interesting when I see Mark Andreessen's name here from Netscape back in the day. Those guys are everywhere. But again, Bitcoin is really hard to ban. This banning of telco internet phone software actually came quite close in the US courts, but they lost. But Bitcoin is a lot harder to ban than internet phone software. So that's not really a concern. And for those people as well that are doomsday preppers, the demand is exploding for supplies to prepare bullets, guns, food, canned food, survival tools, etc. I mean, it's a big thing, and it's getting bigger by the day as people get more nervous about what's going on. And this is trying to help people as well get out of the system, especially with things like central bank digital currencies. In fact, Australia, there was an article today saying they are making their plans to pilot something next year, full steam ahead, central bank digital currency in Australia. And that'll be on top of the EU one they're working on right now as well. UK is probably going to be working on one. US is now thinking hard about it, and they're going to talk more about it in 2023. So these things are coming. And anybody who is a doomsday prepper is looking for an alternative. They don't want to be in the system. So another risk to the protocol is what they call the toxic Maxis. And these are a group of supposedly Bitcoin maximalists that are very aggressive towards non-Bitcoiners or anybody that criticizes Bitcoin and all other projects. And you know who they are. You can see them on Twitter and on YouTube and stuff. But they are very intent on pushing Bitcoin as the gold narrative. And some people say that can be kind of almost like a cult, but there are many cults in crypto, so that's not uncommon at all. And there are pros and cons to this, but we feel that the pros, where it's good to have a dedicated group of people to defend the project against attacks. It's like an immune system for the body. We all know about that as well. But gold certainly has benefited from gold bugs defending it and consistently buying gold. But the downside is they can put Bitcoin in a box, and they want Bitcoin to only become a digital store of value instead of something that can be widely adopted by the public, which is what we'll talk about next. So in addition, another negative ding or black eye for Bitcoin is the El Salvador experiment, the Petri dish. Was it a success or a failure? And you have everybody jumping on board saying, oh, it's a disaster. And of course, the first country to adopt Bitcoin, according to any mainstream media headline, you'll see it failed miserably. First of all, it has not failed. Yes, they've been caught out in a bear market. Yes, it's going to take time for things to play out. Yes, there are some bugs. Yes, they are in it for the long run. And 85% of El Salvadorians didn't even have a bank account. And the IMF was there for 40 years to try and make that happen. They got nowhere. And this thing came in the space of a few months. It was widely adopted. So certainly 1 year later, it has not gone smoothly, and merchant adoption is still quite low. But keep in mind, it's very hard to do something and be first. And that is the big challenge, breaking that ice, breaking the glass ceiling, whatever you want to call it. But there are some success stories, and this is a little piece from Vice, the TV show. And there are El Salvadorians that are starting to get that mainstream media won't report on this. But this man, for example, says it's changed his life. He never had a bank account. He was never able to pay for utilities, bills, internet, and Bitcoin changed all that. And now he can pay his utility bills instantly with Bitcoin. And that's the power of Bitcoin. And as a vendor, he can take payments in Bitcoin, etc. So it has been life-changing for him. But you don't hear about these individuals on mainstream media, but you do from Vice. So good job. Now let's talk about some of the key success factors that are important for Bitcoin for it to really go to the next level. And let's see if we can get up those stairs. So key success factors, critical success factors, whatever you want to call them. So first of all, Bitcoin, we've heard about the store of value narrative. Yeah, is it even possible? And what else? Well, for it to be credible, it must be a medium of exchange, a store of value, and a unit of account. But people argue that because it's volatile, it impacts the store of value thesis because it goes up and down like this, and sometimes down a lot, up a lot. But over time, you look at a log chart, it goes up like crazy. So that's the first thing. And also, as we always say, the more volatility, the more return. So that's one thing. And it will turn around. We've just been through a brutal winter, so we're confident on that. And can Bitcoin be cash 2.0 or even reserve currency 3.0? Well, let's talk about that. Let's look at reserve currencies. And it is kind of like a pinnacle point right now. If you look at this history, and you can see flag number 2 from the top there, the British flag, had some news over the last couple of days. But if the last 700 years are any indication of what reserve currencies can and can't do, you can see they roughly have a shelf life of 80 to 100 years. And the US dollar became the world reserve currency 77 years ago, Bretton Woods, 1944. And people are talking about Bretton Woods 2.0, 3.0, 4.0, etc. And we know something is going to change. Something is going to definitely break. But arguably, USD was the first reserve currency as far back as the 1920s, which would make it somewhere between 80 and 100 years old. Ring a bell? Well, we'll see. Now, from a historical timeline perspective, it's definitely clear that the US dollar is in the twilight of its reserve status, especially with all the acceleration of things that have happened over in Ukraine as a global reserve currency. Big powers like China, India, Japan, probably the United Kingdom are reducing their reserve levels fast. And to put it politely, the growth rate with money printing, etc., is not sustainable either. So that could break down. Now, the irony is not lost on me. Let's talk about the British pound, for example. This from Bitcoin magazine on the left. The British pound is down 12% since the Bank of England governor said a few days ago, be prepared to lose all your money in Bitcoin and crypto. And we have a lot of people from the United Kingdom in the community, and they're being hit right now. And it's not easy having such a loss. And I feel for the people in Japan and other countries, Sri Lanka, where the currencies are just being wiped out, hit hard. But I did tweet last night, and I put together a tweet around 2 different charts. One is US dollar against the British pound, and the Bitcoin against the British pound. And you can see the blue line is Bitcoin against British pound, and orange line is the dollar against the British pound. And as you can see, a lot of people say Bitcoin's not a hedge, but if you look at the last 90 days, it certainly has been an excellent hedge for those in the United Kingdom. So again, more FUD derailed. Let's talk about cash. Can Bitcoin be cash 2.0? And sorry, this is so long-winded, but there's so much important stuff to cover here that a lot of people don't talk about. These are the two Jacks. They're both Jack Mallers and Jack Dorsey. Jack Dorsey's on the left, Jack Mallers on the right. Jack Dorsey is with Square, now called the Block, and Jack Mallers is with Strike. Now, these are two huge champions of Bitcoin, and they want to bring Bitcoin to over 1 billion people. It's like, that billion people in a wallet, same goal as other tokens have as well. And Jack Mallers' view on Bitcoin is it is the best vehicle for transporting value across the world. No ifs, ands, or buts. But let's look at what they're doing right now. Is the Cash App and Strike a savior? Well, Cash App recently integrated with Lightning, and Strike is built on Lightning. So this is bringing about huge adoption. Let's talk about some of the numbers here as well. Lightning Network app users, you can see back in August 2021, 100,000. October 2021, 10 million. March 2022, 80 million people. So the adoption is there, and that's critical, to growing the value of the actual Bitcoin protocol itself. Now let's look at Lightning growth rate as well. You can see here that all payments actually dipped in November, but have since grown to new highs. And they said adding these payments jumped 480% in a year, and total payments are up about 410% as well. So again, volatile, just like the whole space, but adoption is definitely happening. Let's look very quickly at some more Lightning news. Good news is it is working. 70% is used for payments, 30% is used for trading, and the majority, 48%, is individuals paying individuals. Like Jack Mallers said, moving money to each other, transferring value. You owe your friend in the Netherlands money, you pay him in Bitcoin, no fees, no nothing. And only 19% so far is paying merchants, but we expect that 19% to ramp up real fast in the very near future. Now, there are some people that believe Bitcoin can never be used for payments. And this is an article from the Financial Times saying Bitcoin has no future as a payments network, says Sam Bankman-Fried, the FTX chief. And his point of view is you're going to have to do millions of transactions a second. And that's one thing we always talk about here too, with extremely efficient and lightweight network with very low energy costs. And proof of stake networks are exactly that. And obviously, he might be a little bit biased, and we all have to. The story is about us reflecting on our investment theses and our biases so we can be very good investors. But there is something called Solana Pay, and Sam Bankman-Fried believes Solana Pay is the future of global payments networks. So we'll see where this all goes. There is one other challenge as well for us, is for Bitcoin to be successful, we need all generations to adopt it. It can't be for the 30-year-old to 50-year-old people, no boomers, no people, millennials, etc. But a quick example of exactly that. This is key. Gen Z lives on the internet and they're naturally inclined to digital assets, but older generations don't trust it. So we need to find ways to educate those cohorts and help improve adoption. And that is key. Also, there's so much fear and risk around people losing their keys, losing their passwords, and there have to be better ways to really pass down Bitcoin. Maybe through a phone or an app or something. Maybe Apple will do something that'll bring some of these cohorts into the fold real quick. So that is going to be very important for the future. And the final piece of the story is based on where we're going with all this. So if Bitcoin is only a store of value to replace gold 2.0, Bitcoin price could go to $550,000. If Bitcoin can become a global reserve currency, 3.0 thesis, Bitcoin will easily go to $1 million plus. Easily. Super conservative sandbag notes. So this is where we are. We don't know where we're going to get to. There are some challenges along the way, but payments need to be done properly. We got some of the best brains in the business on that. So I'm pretty confident there'll be much more adoption from that angle. Store of value is already there. It's as clear as day. People are looking for a new gold 2.0. And as Michael Saylor says, it's a million times better. So with that, everybody, hope you like the content. Smash the like if you do. Much appreciated if you do. A lot of work goes behind these videos for you. So drop a comment as well below if you believe in this thesis or you believe in something else. We want to hear from you. Thank you, everybody. Have a great evening. And thanks to the team who helped me with this today. And I'll see you all tomorrow. TA Tuesday. Bye.